All right, welcome everybody. So for those of you who don't know, my name is Shedian Jackson, and I am a trained teacher by profession. I'm also a track and field coach and a Forex trader. And this webinar is brought to you by Trading Made Easy. And the reason why I use the name Trading Made Easy is because trading is not hard. All right, trading is simple. Once you understand the basics of the market and you have the right mindset, then you can actually start to work your way towards profitability. All right, so let's start. Now, when I hear the word Forex, what comes to mind? And the first thing you're gonna hear is that the market is $6.6 trillion. All right, it is bigger than the stock market. It opens 24 hours, 5 days a week, and you can make money at any time of the day. All right, this is true, but there is also some invalid information here as well. All right, the market is actually $6.6 trillion. And the New York Stock Exchange, the London Stock Exchange, and the Tokyo Stock Exchange combined together still cannot match the $6.6 trillion. All right, so this is the largest financial market globally. All right, it opens 24 hours a day, 5 days a week. But can you make money at any time of the day? All right, that's the question right here. No, you can make money, but you have to understand that in the Forex market, you have different sessions. All right, and as we go along, I'm going to identify the different sessions. Now, the Forex market is operated by banks and large financial institutions. All right, and in order to make money in the Forex market, you have to trade the market when the banks are open. All right, that's when the banks actually move monies in the market. All right. Now, the word Forex stands for foreign exchange. All right, and it usually the person usually just call it Forex or FX. All right, and this is the largest financial market, and this is a global market that allows one to trade two currencies against each other. Now, in order to make a trade in Forex, you have to be trading one currency against another. All right, how do you make a profit in the Forex market? If you think that one currency will be stronger versus the other and you end up correct, then you can make a profit. And you do this by buying and selling currency. Now, if you buy the currency and the market goes up, you will make a profit. All right, if you sell the currency and the market goes down, you will actually make a profit in the market as well. And as I go along, I will explain these so that you guys can actually get a better understanding. All right, now the types of traders. Person like me and you, we are considered to be retail trader. All right, and we are going to look at the different examples of retail traders. Now you have a scalper. All right, and scalper actually hold trades for a few seconds or a few minutes. All right, and the objective is to grab small amount of pips in the Forex market. All right, now whenever I go in the FX market, like I usually target anywhere between 10 to 20 or 30 pips. All right, because what I realize based on my experience is that it is easy for me to get 10 pips in the market. And sometimes I get 10 pips and then, the market pulls back to my entry and then, probably get stopped out or go back in drawdown. So I always target like 10 pips. And once price hit 10 pips, then, you know, I secure some position and move my stop to entry and just leave the rest to run. So a scalper, you know, hold trades for a few seconds or a few minutes, and their main objective is to grab small amount of pips. All right. I also have the day traders. All right. Now, most of the analysis I would have sent in the group would have been day trading, meaning, you know, I usually pick a side based on my analysis at the beginning of the day, and then acting on that bias, and then finishing the day with either a profit or a loss. Now, when I am doing day trading, the risk to reward usually be, you know, 2 to 1 or 3 to 1, meaning I'm risking 1 to make 2 or 1 to make 3. And you also have swing traders. Now, the swing traders, they usually all trade for several days or weeks. I don't like to hold a trade from one day to the other. All right, so, you know, get in, get out, or hold it for a few hours, and that's it for the day. All right, we also have the position traders, and position traders are usually considered to be institutional traders. All right, and these types of traders all trade for several weeks, months, and even years. All right, so person who would have actually bought Bitcoin like 6 years ago and even hold it up to 2020, you know, they are basically a millionaire right now. So those persons are considered to be position trader. But, you know, I rather to focus on scalp and day trading, where, you know, I get in, get out at the end of the day, or, you know, if the market is ranging and choppy and I can get a 10, 15, 20 pip, I just take that and call it a day. All right, and as I go along, I will provide a definition for a pips. Now, banks. We have a list of banks here, and these are the largest banks and other corporations in the Forex market. All right, so the JP Morgan is at the top, and their share in the FX market is actually 9.81%. All right, you have the Duchess Bank, you have the Citibank, you have the XTX markets, you have UBS, you have the State Street Corporation, and the list goes on. But if you look at the list right here, you notice that most of these banks and corporations are from the United States. All right. So that's the reason why when I tell person the best time to trade the FX market is in the New York session. And this is the reason behind that, because in the New York session, these banks and corporations actually move the majority of the market. All right, so I'll advise person who are currently trading, a new prospective trader, if you can focus on the NY session, you know, just go ahead and do that. You know, you also get good volume in the London session as well, you know, but as we go along, I'm going to provide you with the different sessions. Now, we're going to look at the exchange of currencies. All right. So now, if you ever travel to another country, usually you have to find an exchange booth, or you have to go to the Cambio or the bank in order to change your local currency into a foreign currency, which is, you know, the country you would be visiting. All right. Whenever you do this, guys, you're actually taking part in Forex. All right. You're actually taking part in the Forex market without even knowing it, because you basically, you know, sell your Jamaican dollar to purchase some USD to travel overseas. Right? Now, take for example, you go to the bank and you bought $100 for like, you know, 14,000, and you travel overseas. And when you come back to Jamaica, you know, you go back to the bank to change that same $100, and then you realize that the $100 is now valid $16,000. What had happened during that travel? You know, it simply means that the US would have gained strength over the Jamaican dollar. All right, and it's the same thing in the Forex market, you know. Once USD gains strength, the market gonna push up. You buy into the market, you exit the market. That profit just the same. All right. So once you hear the word Forex, it simply means a foreign exchange market. All right. Now, this screenshot was taken on March 25th. All right. One USD is valid Jamaican, value Jamaican 145.38 cents. All right. 1 day later, it is valued at 145.23. All right. On a day-to-day basis, you're going to find that currency strength might increase or it might decrease. If it's even by a few cents or a dollar or so, because a few weeks ago, this was actually at 152. Now it's all the way back down to 145. All right, and as I can see, it has been descending on this chart right here. You know, so it's actually the same thing in the Forex market. Price don't sit in one place for too long. Even when prices, you know, is in a range, you're gonna come a time when you're gonna have breakout in the market where you will get some solid movement. All right, now we're going to look at what is traded in the Forex market. Money in the Forex market. All right, and think of buying a currency as buying a share in a particular country. And I'm going to use Jamaica as an example, and I will explain that to you guys. All right, so don't get be confused by this. Like once you get into the analysis of chart and stuff like that, everything will be smooth sailing with the right time frame. All right. Now the price of the currency usually a direct reflection of the future health of the economy. All right, and we know that the economy in Jamaica is very bad, you know, poor infrastructure, lack of jobs and stuff like that. And Jamaica pretty much import more than how they export. You know, so those are some of the factors why the economy is so bad. All right, and trading in Forex, when you actually buy the Jamaican dollar, you're basically buying a share into the economy. And when you actually sell back your share to the market, you are basically exiting your trade and you will end up with a profit if the market pushes in your direction. So once you buy into the Forex market and the Forex market push into your direction, meaning the market goes up, you will actually make a profit. If you sell in the Forex market and the market push down, you still will make a profit just the same. You just don't want price to hit your stop loss. And again, I will do some demonstration of this after I finish the presentation. You know, so in general, the exchange rate of one currency versus another currency is a reflection of the condition of that country's economy compared to other countries' economies. All right, now we are going to look at major currencies. All right, so we have 8 major currencies. All right, and the USD is actually at the top, followed by the euro, and then you know you have the GBP, JPY, you have the CAD, the Australian dollar, the New Zealand dollar, and also the Swiss franc. The reason why this is at the top, it's because it is the most traded currency in the Forex market. All right, the USD is the most traded currency in the FX market, followed by the European euro. All right, major currency pairs grouping. Now, starting out as a new trader, most of you will actually gravitate towards currency that you actually know and recognize. All right. Now, major currency pair are those that includes the US dollar and most frequently trade. All right, and we have 7 of them. So the first one is the Euro USD. All right, 2 major currency, the USD JPY is also another. You have the GBP USD, the USD Canadian dollar, the USD, and Swiss franc, the Australian dollar and the US dollar, and you also have the New Zealand dollar and the USD. Now, if you should ever check the exchange rate for the Japanese yen compared to the Jamaican dollar, you know, there's not much difference, but the reason why it is considered to be a major currency pair, because we know that Japan do a lot of manufacturing. All right, most of the cars in Jamaica right now are manufactured in Japan and actually shipped to different countries just the same. All right, so Japan is very, very big as it relates to production. All right, so currency pairs now. You know, we have the euro, we have the yen, we have the GBP, we have the CAD, we have the AUD, and we have the New Zealand dollar. And we actually just look at the USD. Now, when you go in the Forex market, you're going to find out that the euro is actually placed before the GBP, even though the GBP has a greater value than the euro. I think the euro is probably about, you know, probably about 160, 170, and the GBP is now about $200. And the reason behind this is because of convention. And this decision was actually made by the major countries that, you know, take part in the Forex market. So you're going to see the euro before all other currency pairs in the FX market. All right. But for me, I like the GBP JPY, and the reason being is because whenever I am trading the Great British Pound versus the yen, you know, the Asian, Japan is closed. All right. So at that point, you know, New York open, you're going to have a lot of volatility in the market. So you can actually get better movement on that currency pair. Just a second, guys. Let me give somebody access. Just a second. What's up? All right, so current slide. All right, so how many currency pair exists? All right, we have hundreds of pair, but only 180 of those currency pairs are actually recognized by the United Nations. All right. Now, buying and selling currency pair. Now, Forex trading is the simultaneous buying of one currency and selling of another. And currencies are traded through brokers. And they are also traded in pairs. So you cannot trade just the US dollar alone. It has to be paired with another currencies. All right. And currencies are quoted in relation to another currency. And I'll explain that. All right. Now, what is a currency pair? A currency pair is a pairing of currencies where the value of one currency is relative to the other. And this is an example right here. You have the GBP USD is the value of the British pound relative to the US dollar. So all you have to do, once you know how much the pound is valid and the US dollar is valid, then you can actually, you know, find the value of £1 as it relates to the USD. And it's the same as it relates to the USD and the Jamaican dollar. You know, one USD is value 145. You know, so if you need to know how much 10 USD is value, all you have to do is just times 10 times 145, and you will actually get the value for that. All right, so the Forex market size and liquidity. Now, the bulk of the Forex market takes place on what we call the intrabank market. All right, and the intrabank market is a top-level foreign exchange market where banks exchange different currency. And the banks can either deal with each other directly or through an electronic brokering platform. Now, a regular person like me and you, we don't have access to this market. All right, we have access to the broker or the brokering platform which execute trades on our behalf. So when we select a buy in the Forex market, it actually goes through the broker, you know, to the top level foreign exchange market where they actually execute the transaction, and this is done within a split seconds. You know, so you don't need to worry about how long it will take for your trade to open. You just want to know that you have good internet connection and a fast enough electronic device using to actually execute your trade instantly. So unlike other financial market like the New York Stock Exchange and the London Stock Exchange, the Forex market has neither a physical location nor a central location. All right, the Forex market is considered to be an over-the-counter market, you know, OTC or intrabank system due to the fact that the entire market is run electronically. So there is no physical location for the Forex market. Once you have a good electronic device, you have an account with a broker, and you have internet, you can actually make trades in the Forex market. So the Forex market is globally, you know, and for me, I consider this to be a hidden market because a lot of persons don't know about the Forex market. All right, now the United States dollar plays a central role in the Forex market. All right. And I'm going to just go through the reason why and explain each. Now, the United States economy is the largest globally. All right. And the US dollar is also considered to be a reserve currency, you know, because most persons right now, if they are doing any form of transaction, they require it in USD. Even in Jamaica, anything at all you're going to do, they want it in USD. If you're going to buy a car from Japan and their currency is yen, they're going to tell you that the car might value 3,000 or 4,000 USD, even though they are using yen there. If you want to go to the hotel, they are telling you that for 2 nights it's $200. You know, if you're going to buy a course in Forex, they're going to give it in USD just the same. You know, if you are importing goods from overseas, they are going to tell you that they want it in US just the same. So it is the most traded currency in the Forex market. And, you know, persons try to use it as a medium of exchange for a transaction. All right, and also the United States has the largest and most liquid financial market in the world. So with the Forex market and also the New York Stock Exchange, the NYSE, you know, with those two combined, you know, it is the largest in the world. All right, and the United States also has a stable political system. You know, apart from Donald Trump with, you know, his uproar over the last 4 years, overall, the US political system is very stable. All right, and the United States is the world's sole military power. And this simply means that there is no other country that can actually combat the US in military power. And again, you know, the dollar is a medium of exchange for cross-border transactions. So any transaction out of Jamaica, they are going to tell you that, hey, I need some US dollar to do this transaction. All right, now we're going to look at the market opens. All right, so the market is open for 24 hours each day. All right, So at 5 p.m. EST on Sunday, trading begins. All right. And this is the opening of the Sydney session, but I don't consider the Sydney session to actually be a session, because during this time period, you're going to find that there is no volume in the market and spread will also be increased. And I will explain, spread as we go along. And at 8 p.m. EST, you have the Tokyo market opens, which is followed by the London at 3 a.m. So for a person who is trying to trade the Tokyo session, the best time to start looking at your chart is from actually, like 7:30, you do your analysis and actually identify the play that you're looking for in the market. And finally, we have the New York opens, which is at 8 a.m. EST, and the market closed at 4 p.m. EST, and that's the EST is for Eastern Standard Time. All right. And before the New York is closed, you have a Sydney session again, but then spread increase. So, and the spread is a difference between the ask and the bid price. And the spread is actually what the broker charged to execute the trade if you are using a raw spread or a standard account. Just a moment. Just a moment. All right, so these are the different market sessions. So you have the pre-Asian. Again, I don't like the Asian session. Like if I'm looking to do a day trade, I might look for my setup in the Asian session, but I know that, I might not see any big movement during that time until we approach the pre-London or the London Open. So the best time if you're looking to trade the London session, the pre-London is good to look for a setup. All right, so currently it is from 1 a.m. to 3 a.m. At this time, you will find some form of volume in the market. It is not a lot of volume, but you can actually get decent movement if you do your analysis and you get the confirmation to buy or sell in the market. You can actually get some decent play. All right, now you have the London Open from 3 a.m. to 5 a.m. Eastern Standard Time. That is Jamaica time currently. At this point, the Great British Pound is open and basically the Japanese yen is coming to a close. So if you are trading the GBP within this time, you're going to find a lot of volume in the market. All right. And then you also have the London close, which is like from 10 a.m. to, about 11:30, 12 thereabout. And then you have the pre-New York. This is the time I usually comes to the chart. 6 a.m. to 6:30. Do my setup, identify the play that I am looking for, and wait for volume to hit the market. All right, and you also have the New York Open, which is from 8 a.m. all the way up to 9:30. A lot of volume in the market during this time. So from 8 a.m. in the morning to 9:30, you're gonna find good volume. And you also have the NYSE, the New York Stock Exchange. When the stock market is open, it also influences other currency pair to move just the same. So from 8 to about 11:30, good to trade, but you can actually look for your setup between 6:30 leading up to the 8 o'clock opening. All right, and then you have the New York close. So like after 11:30, 12, I wouldn't advise anyone to be looking at the chart and trying to force trade or stuff like that, because the bank could have already moved the money that needs to be moved from from 8, 9, 10 o'clock thereabout. And once you say 12 o'clock, 1:30, then low volume in the market. So you might enter a trade and then you get stuck in drawdown, or you're in the trade and you wonder why it not going a profit, or and the reason behind that is because there is no volume in the market. All right. Now, I'm going to look at the different platform we actually use to trade the Forex market. All right, so just a moment while I actually show you guys. So the name of the platform is actually TradingView. Tap, 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 tap. TradingView. Whiteboard. So let me just present. Now, this is TradingView, all right? And this is what I actually use to do analysis in the Forex market, all right? So the URL is tradingview.com. All right. So sign in. All right. So what you can actually do with this is to use your Facebook account, or you can use your Google. And for this purpose, I'm just gonna use Gmail to actually sign in. Now, when you sign into tradingview.com, all right, you will actually get this page. In order to access the charts, you can select charts right here, and you can go down to all chart layouts. And yeah, can go down to that. Once you do that, it will actually take you over to this page. All right. Now, we have the currency pairs right here. This is the Great British Pound, the Japanese yen. You have the gold, the USD, the New Zealand dollar, the Japanese yen, the Great British Pound, the USD, the European euro, and the Japanese yen, the European euro, New Zealand dollar. You also have the US 30 and the USD Canadian dollar. Now, in order to remove a currency pair, all you have to do is to just select the X right here, and it will be deleted. To add a currency pair, you click on this plus sign. All right, you will get a list of the different currency. Now you can look at stocks, futures, Forex, CFD, crypto, index, economy, but I just try to focus on, the regular currency pair. All right, so take for example, if I want to add Euro USD to my chart, I just select the plus sign and it is added over here. Same thing for the Great British Pound, the Japanese yen, select, it will be added over here just the same. All right, if I want to add the Australian dollar and the USD, select the plus sign, it will be added here just the same. All right, now we also have the different time frames. Very important. Now, in order to get the time frame to be visible right here, all you have to do is to just select the drop down menu here, and you just click on the star to the side, and it will actually add the different time frames. All right, all you have to do is to just select these stars to make them your favorite, and it will be added in this section right here. Now I use the 5 minute, the 15, the 30, the 1 hour, the 4 hour, the daily and the weekly. Sometime I might look at the monthly time frame, but I mainly focus on these time frames right here. Most of my trades are executed on the 30-minute and the 15-minute time frame. All right. Now, in order to add the tools that I actually use to analyze the Forex market, I use the cross, and the thing with the cross is that, wherever you you move your cursor, you will actually see the market price to your right. All right, so wherever I go with the chart, I actually see the market price. So take, for example, you know, we have a support here, and I will explain that later on. And I know I bring it right here. I will actually see the price to the left. So I use this when I'm doing my analysis as well, so that, you know, I can actually see the different price as I move it around. Now, in order to add your tools that you use to do the analysis, I use the trend line, I use the horizontal line, sometimes I use the horizontal ray, and I use the arrow. All right, now in order to get these over here again, all you have to do is to just select to add to your favorite, and it will be added. If you need to remove it, you come back right here just the same. You remove it from your favorite just the same. All right, but for now, I'm just gonna keep those on. And also you have, you know, I don't really use these, so, you know, for me, they are irrelevant. Apart from the Fibonacci, for person who use the Fibonacci, you know, it's very useful. But I don't really mess around these gangbacks and pitch fan and inside pitchfork and stuff. I don't use those things. So don't be alarmed by all of this. I think the best one right here is the fib retracement. And in order to add that again, you can select Alt F, or, you know, just press the favorite to add it to your favorite. All right, I also use the rectangle. All right, so again, it's the same process. You can make text your favorite. So take, for example, if you want to actually write on the screen, all you have to do is to just select the T, put it in the area you want to drop notes, you type your notes, you select OK, and it will be added there. If you want to actually move this to another location, you just left click and drag and drop it wherever you want it to go, and that's it. All right, you also have the long and short position. Now, these are used to calculate your stop loss and, you know, your take profit based on what you're looking for in the trade. So take, for example, if I enter a trade right here at 1.25714, you know, for a buy, you know, and I anticipate the market to actually push up back to retest this level or over here, then I will select my long position, which is for buy, you know, and I will drop it at entry here. And this would be my entry. All right. Now my stop loss would be below this level right here. All right. Take profit here. Now take, for example, if you take a buy right here, guys, take a buy right here and you have a stop loss here and the market pulls back. The market pulls back and hit this, then, you know, you're out of the trade. You're done for. All right. But take, for example, if you take the buy, here, and once you take the buy, the market just push all the way up and hit your take profit, you know, then you would have actually made a profit. Just gonna remove that. This is something I stuck. Just a moment.
Double click it, Majid.
Go back, it's supposed to remove it. But anyways,
You have to double tap it for it to start.
I don't really use that still, so I don't know that operates because I don't use that. Now, in order to calculate pips in the Forex market, guys, you use the measuring tool. I think it is best on GBP, JPY. Now, pip is the movement of price in the FX market. All right, now you have a ruler right here. This is what you actually use to calculate pips in the FX market. Just making this a bit better. All right, now we took an entry at 151.00. All right, so you see from 151.010, which would be right here, this is 1 pip. So if you're risking $10 per pip, with this 1 pip move, you will actually make $10. If price move from 151.00 to 151.020, this is 2 pips. Again, if you are risking $10 per pips, you will make $20. And the same goes on for 0.030, 0.040, 0.050. All right, my target is usually 10 pips in the FX market, which is this. This is the minimum 10 pips. This is the minimum target in the FX market. So once I can get this with a 1 lot or a 2 lot or a 3 lot, whatever the case might be, make $100 or $200 or $300 on one trade or more, I'm good for the day. But at 10 pip, I am going to actually move my stop loss to entry. All right, I am going to actually move my stop loss to entry. So I'm just making this a bit better so that you guys can see. Now, usually 1-to-1 risk to reward are more. So take, for example, I enter a buy here, price pull back a little here, bouncing around, and then price actually push up and it 10 pip. So you see, as price is 10 pip, I'm going to close about 75% of my open position. This is my stop loss right here. I am going to actually move it to my entry, and I'll show you guys how to do that as we go along. All right, secure some position and then leave the rest to run. So if price should pull back to my entry, I would have secured 60, 70, or 80% of my open position, and then the remaining position would get stopped out. But I would not lose any money at this point. If price continue to push up, just the same, I will actually make more money. All right, but at 10 pip, I'm going to secure some position and move my stop loss to entry. All right, now in order to remove this, all you have to do is to just select it, click the delete, and it will be deleted. Any other line, just select the line, click delete, it will be remove as well, just the same. All right. Click delete, it's just the same. So the next platform is Forex Factory. Now we use Forex Factory to actually track news events coming into the market. All right, now when you go on Forex Factory, all you have to do is to select calendar. Select calendar, it will actually show you the different dates. Here you have Sunday, March 21st, you have March 23rd, and come all the way down. So Saturday, Friday, news. Just go and look for this Sunday. All right, so daylight saving time shift for the Swiss franc, Euro USD, and Euro GBP. Again, go back and check your calendar. All right. The New York time, I think it changed last week, and now you have the GBP time changing as well. So you can go back and look at that. Now, these folders, yellow folders are considered to be low impact news. So they don't really have any significant effects on the FX market. All right. Orange folders like these, you know, they are medium news. You might see some spike here or there, but it's still not significant. You see these red folders, whenever you see these folders, don't trade during that time period. All right, because sometimes based on the news that they are anticipating in coming in the market, you know, it might not be that actually news, and the market can push price up and down within a second. All right, and I actually did that on a Zoom probably about 3 weeks ago. You know, I think it was Euro NZD, and it pulled down so fast and then it shoot right back up within seconds. You know, so I try my best to stay away from news. So when I come to the chart in the morning, the first thing I actually do is to check my calendar for news events. Very important. All right, and as I go along, you know, you can select the folder, check the previous numbers. So the previous number that came out here is 36.7. So when what they're forecasting is 34.5, and the actual number is 30.5. You know, there's a high possibility that this number will actually drive the euro down. But again, sometimes you might anticipate the market to push it down, and then, you know, news come in the market and it push it all the way up. So just try to monitor the calendar for a news event, and, you know, try to stay out of the market when there is news like this. So the next one is the MT for the MT5. All right, I'm going to show you guys the MetaTrader 4. Now, this is what the MetaTrader 4 looks like for PC. All right, this is what it looks like for PC. This is actually on my simulation software, so I don't actually use this on the current computer. But, you know, this is where you actually go to add your account, and you have the currency here. So in order to add a currency on this screen, all you have to do is to just left click, drag it and drop it on the screen, and then it will actually open the currency. All right. In order to actually buy or sell, you can right click on the currency, and then, you know, you go to open trade, you put in your stop loss, you put in your take profit, and you click open, and your trade would be active. This is where your balance would be, and also your equity and free margin. You know, you have your trades here, you have your account history. So take, for example, if you take a trade and you want to go back and actually view the result of the trade, then you will select account history. But I'm going to also show you guys this on the MT4 for the smartphones. But this is what I actually use to do my trade on my laptop, and, you know, I also watch it on the phone. But as it relates to risk management for each trade, this is done on my computer. Now we are going to look at what is a broker. So the broker is a financial service company that provides trader access to the trading platform for buying and selling foreign currency. All right. A Forex broker may also known as a retail Forex broker or a currency trading broker. Now, for a person in Jamaica, what I would recommend you to use for your broker is IC Markets. And this is from my experience. All right. Now, IC markets, they have good spread. They have very good support. As it relates to deposit is instant. Like I think the longest delay I had with a deposit was about like 5 minutes, you know, and that is pretty much nothing. But deposit is instant. I got withdrawal from IC market as fast as within 24 hours. All right. So you don't have to wait for a week or 3 days or 4 days. The only problem you would have as it relates to withdrawal is if the bank decides that, hey, we don't like where this money coming from. You need to provide us with some information, or you're doing trading, you need to pay some tax or stuff like that. So my advice to person also is to try and get a prepaid card. I heard person talking about the Sagicor card. Once it is a debit card, Visa card, or MasterCard, you can actually use it to deposit funds with IC markets. All right, because you know it's the same here in America. If you are doing trading, when you withdraw, you know you have to pay taxes. If not, the feds them are come down by you very hard. But you know we have other ways to bypass that with cryptocurrencies and stuff like that. So persons who are actually looking for a broker, you can use IC markets. They are very good. And it doesn't make any sense you try to jump from broker to broker to broker. Just focus on one broker. And you know, most broker offer the same spread, but based on my experience, IC market is pretty good. I heard person talk about at Forex and some other brokers. It is your option if you actually want to use those broker. Now, IC markets. When you go on their website, this is what it will actually looks like. All right, so www.icmarkets.com, and you click on client login. Once you select this, it will prompt you to create an account. So you can use your Gmail, your Yahoo, your AOL, whichever email you choose to use. And then you will actually create an account. Once you create the account, you know, you will be required to provide your identity. All right, so you can use a passport, your driver's license, you know, either of those is good. Or, you know, I never tried a national ID, so I can't advise you on that. But IC market have spread as low as 0.0 once you are using a raw spread. All right, and this is where you actually pay the broker commission to execute the trade. All right, and they offer leverage from 1 to 500. I will explain leverage later on. And microlot, which is, you know, basically 1 cent, you know, and this would have been like 10 cents per pip. So very low, very reasonable for a person who is starting out. You can use them. They are good just the same. All right. Once you get verified on everything, this is what the account will actually looks like once you get into the account. So you're gonna see, you know, deposit account. If you want to download the MetaTrader 4 or the MetaTrader 5 for your computer, you select this option, and then you can go ahead and download that. All right, you have MT4 accounts, you have C traders. I don't use C traders, and then you have MT5, and down below on the screen, you can actually open a demo account as well. All right, IC market minimum deposit is $200. That's what they have on the website. But when I just started out, I think I deposited like $20 in the account. You know, so they are not going to kill you or close your account or, you know, kick you out of their brokerage because you deposit $20 or $30. Whatever you have, you deposit. Even $10 put in IC market when I even started. So you don't need to worry about a $200 or $300 or $500 deposit. You know, live account, demo account, just the same. You can open a demo account. So once you select the option to actually open an account, they will actually send you an email that will look like this. All right. You will get an email. All right. Dear Jackson, Shedian, congratulations on your account. Department have approved your identification documents and your live trading account has been created on our trading server, you can log in into your account using the details below. The trading platform for this account that I have used is the MT4. All right. For the login, you will have a series of numbers. More than 3 digits, I just block out the rest. And for your password, it might be letters and numbers. And then the server, very, very important. So when you actually go on the MT4 and it asks you to select your broker, once you select your broker, whichever server they provide you with the email, that's the server you will select along, with your login and your password. So key right here. As I state here, the minimum deposit is 200, but you can actually deposit less than that. So you don't need to worry about that. I don't know about other broker, but I am speaking from my experience with IC markets. All right. And once you log in, then you can start trading. Now, how to use the MT4 or the MT5 on your mobile phone or your smartphone. So the first thing you want to do is to go over to the Play Store and you will put in MT4 or MT5, whichever option. But in this option, I'm using the MT4. All right, you will install the software on your phone. All right, once you install the software, you will click open. Now, when you open, when you select open, it will actually create a demo account for you automatically on the MT4 or the MT5. All right, now this section is where you actually view the different currency pairs. All right, so we have the AUD, CHF, the AUD CAD, just the same. So this is where you will have your currency pair. So if you want to view your currency pair, you can select this option right here. All right, let's go along. Now, this option right here is to view your chart. All right, now in this case, we are looking at Euro USD. So it will show you the currency pairs that you are looking at and also the time frame that you are on. This is the 5-minute time frame. Now, in order to toggle between the different time frame, all you have to do is to just just press on any area of the screen and it will bring up this circle. And you as you see here, we have the 1 minute, we have the 5 minute, the 15, the 30 minute, the 4 hour, the 1 hour, the daily, the weekly, the monthly. You can toggle between the different time frames. All right, so I change it to the 15, then the 30, then the H1, then the H4. So just press on any area on the screen. Now, this is where you actually view your account balance. All right, so once you select this option right here, it will show you your account balance, your equity, and your free margin. As we go along, I'm going to explain these to you guys. All right, now on this section of the screen, you can actually view your transaction history. So when you open a trade, this is where you will come to view your history. All right, whether profit or loss, this is where you will actually come to view that. All right, now how to log into your IC market accounts. I'm going to show you guys an example. All right. So what you want to do is to select this plus sign. And when you select the plus sign, you will search for your broker. All right. Now, there are a lot of different brokers. So once you start to put in the words, you're going to see different brokers start to pop up. So in this case, we're going to look for IC markets. All right. So once I put in ICMA, you're going to see a bunch of different IC markets. Now, back to the server. The same option that they sent you in the email, that's the one you're going to look for. And in order to scroll down, all you have to do is to just select this and just bring it down, or you can swipe up on your screen on your smartphone, and then you can actually go down to look for the server that you will actually use. And once you select the server, then you are going to put in your login credentials. So the login and the password, and then you will be signing with your IC Market accounts. All right, so I'm going to show you guys how to actually open a trade. So now, in order to open a Euro USD trade, all right, you will have to select this box right here with the plus sign, and it will take you to the screen where you can actually buy or sell. All right, now select it. It will take you to the screen. This is where you actually change your lot size. So for now, I am using a 1 lot on this account, all right? And a 1 lot is equivalent to $10 per pips, all right? This is where you actually set your stop loss. And this option right here is where you actually set your take profit. So SL means stop loss, TP means take profit. So whenever I do a chart breakdown, I say TP, it stands for stop loss, take profit, and SL stands for stop loss. And you might see partial ST, it means for partial stop loss. If price hit that area, I'm going to close 50%. Or if price breaks and close below that area, I'm going to close 50%. So in this case, we open a buy position. Now notice, we just opened the buy position and we are in a $22 drawdown. All right. This is because of the current spread. All right. So you see, this 22 right here is basically what the broker will actually make to execute this trade. Now, in order to set your stop loss, now in order to set your stop loss, take for example, you want to set it now in order to set a stop loss below this area, all you have to do is to select the cross right here. All right, and when you select the cross, you will just bring it down and identify the area that you want to place your stop. All right, you will look at the number right here, 18304. All right, and then you will move over to this area. You will move over to this area. In order to modify your stop loss or your take profit, you will swipe from the right side of the screen to the left side. It will bring out this blue rectangle box. Once the blue rectangle box is out, you can select this option to enter your stop or your take profit. All right, if you want to close the trade, you will select this circle with the tick. Or if you want to go back to the chart, you select this option right here. But for now, we're just going to put in the stop loss. All right, so you enter your number, 304, and you click modify, and it is now modify. And if you come back here, you can see that we have SL, which stands for stop loss, right here. All right. So, all right, how to close partial. So take, for example, you are in the trade, you no longer feel comfortable, or you're in some profit, you want to actually close some position. Again, swipe from the right to the left, select the circle with the tick, and then it will actually takes you back to the area where you can close the trade. Now, in order to close with loss of negative $25, you just select right here. All right. If you want to close partial position, you have two options. You can reduce your lot size by 10, or you can reduce it by 1, like 0.01. All right. So you have these two options here. All right. So what I'm doing now, I am reducing it to a 50-cent lot, basically. All right. I reduce it to a 50-cent lot and I select close. This is what I do to manage risk. So if I identify that the trade is no longer valid and I want to cut my position, I swipe from right to left, select the circle, and then I modify how much position I want to close at the top left hand corner, select close, and in this case, we close 50%. All right, close another percent again, just the same. All right, now if you want to add another position, guys, all you have to do is to select the plus sign and just put in your stop loss, you take profit and just press buy. All right, if you want to add 3 position, again, you will select the box with the plus sign, put in your stop loss, you take profit, press buy, and you can manage your trade as you go along. Again, you can put in your stop loss, 1804, 18304. And we also have the option to add currency pair to the main screen. So if you want to add a currency pair, you will select this plus sign, and then it will actually takes you to where you have the different currency pairs. So you can search for the symbol, or you can select Forex here, and it will give you a drop down of all the different currency that are traded. And all right, so for this case, we are looking for the Great British Pound and the Yen. Select it. It will be at the bottom of the screen right here. All right, in order to remove the unwanted currency here, you will select this pencil. All right. Now, once you select the pencil, guys, in order to, move, take for example, I want to put this at the top of my screen. All I have to do is to select these 3 strokes right here and just drag and drop it at the top of the screen, and it will be in that position. All right, take for example, if I want to delete a currency or remove it from my currency screen, all I have to do is to just select the bin, tick the one that I want to be removed, and then, select delete. All right, and that's it. So the MT4, MT5, it's the same process on the MT5, very easy to use, So this is just an example of how to operate the MT4, MT5. You can actually go over to your different lines and, Fibonacci channels and stuff like that. But I don't do any form of analysis on my smartphone. So, there is no need for me to use those. But you can add your vertical line, your horizontal trend line, trend by angle, arrows and stuff like that to your main screen. So all you have to do, select this. It's gonna take you back to your main screen, and you just drop it where you want it. But doing analysis on phones, it is very, very dangerous. And I don't really advise it. All right, so let's move on to the next. So now we are going to look at funded account in Forex trading. And yes, this is real. You can actually get a funded account to trade in the Forex market. All right. Now I'm going to be looking at the different types of challenge we have. So the first one is the FTMO challenge. All right. Now, this is a trading proprietary firm. All right. And what they do, they offer you a challenge. And once you can pass the challenge, and then you move on to the verification stage, and you complete these two successfully, you will then get a funded account to trade with. All right. So for the USD 10K account, it is Euro 155. All right. Your profit target on this account is $1,000 in the verification stage. You get 30 days to complete this challenge. This is 30 calendar days. Overall, it is about think it is about 21 to 22 trading days in the FX market thereabout. All right. Now, if you're targeting 1 to 2% on a daily basis and you can successfully make that after 10 trading days, then instantly they will move you over to the verification stage. All right. But bear in mind, your max daily loss on this account cannot exceed 500 USD. If it goes below 500 USD, then you are going to fail a challenge. All right. And you will have to buy another challenge. Your max loss overall, it cannot exceed 1,000 USD. All right. So if it falls below that, again, you are out of the challenge and you have to make this profit target within the 30 days. So once you can successfully do all of this, you can get a funded account and you can move on to the verification stage. This is just a test to see how disciplined you are, how consistent you are, and the type of trading style you actually use in the Forex market. All right. Now, when you move on to the verification stage, it is no longer 30 days. They move it up to 60 trading day, 60 calendar days, which would be like, probably about 40 trading days. Again, for the first 10 days for both the FTMO challenge and the verification stage, you have to open a trade in the first 10 days. So take, for example, you buy the challenge tomorrow, Sunday. You have to open a trade Monday, Tuesday, Wednesday, Thursday, Friday of this week. And the following week, the same Monday, Tuesday, Wednesday, Thursday, Friday. And if you successfully pass it, then they move you on to the verification. Once you complete the verification successfully within the first 10 trading days, then you will be granted access to a live trading account. All right. Now, when you get the live trading account, it's the same. You cannot lose $500 within a day, which would be 5% of the 10K account. And you cannot lose 10% overall, which would be, $1,000. Now, that's the reason why I advise person, whenever you're trading in the Forex market, only risk 1 to 2%. In this case, for this challenge, I would recommend using 1%. Because at the end of the day, your max daily loss will be $500. And if you are taking 1 to 3 trades per day, whether win, lose, or draw, you still would have an extra $200 for that day. So just try to focus on 1 to 2 trading setup. If you feel the need to take a third trade, ensure that your first 2 trades are a winning trade and you just risk a small percentage of one of those gains. All right. You also have different account size, the 25K as you move along, the balance gonna increase. And the good thing about this challenge, if you can do it and successfully pass it within the first, and well, once you do it and pass it and you're profitable for the first month, they will refund you your deposit to do the challenge. So you will actually get back this money. All right. So currently I'm looking towards one of these. That's what I'm focusing on right now. All right. But for person, don't be discouraged or anything like that. As I said, just look at Forex as something you want to achieve throughout your lifetime. Just look at it as a lifetime goal and as a hobby, you know, be passionate about it and just work along with the process and actually try and work your way up to this. And you know, you can even build yourself up from the ground just the same. So you can actually check out the FTMO challenge. You know, it's pretty good. The other ones I know about, but you know, I'm not really interested in these at the moment. So you have funding talent. I don't like funding talent. They are legitimate as well, but you know, the thing with funding talent is that you actually have to pay a monthly fee. Let's see. Now, with funding talent, you actually have to pay a monthly fee. I'm just scrolling down to check. And funding talent is a longer process. You know, that's the thing I don't like with funding talent. Their process is a bit longer. So for funding talent, they offer 2 account size, 25K and the 100K. Choose the account size, select the broker. You will receive a login credential to a demo account within 24 hours after the purchase. And then, you know, you can start trading. The good thing with funding talent is that you don't have a max target goal to reach at the end of the day. All right. Now, what they usually do, 10% of all the profit you make on the demo account, there is no caps to this earning, and they basically put 10% of what you make every 2 weeks towards your live trading account. So take, for example, if you are trading a 25K account, basically, and you make 10% of that. So every 2 weeks, 10% of that will actually go towards your live trading account, and it can start to work on that and build it up. You know, but the only thing I don't like with funding talent is that you have to pay a monthly subscription, and if you don't, then they're going to cancel your subscription with them. All right, and also they have a 25% split. You keep 75% of the profit, they keep 25. For FTMO will keep 30 and you will keep 70. All right, you can also YouTube FTMO. They have a YouTube page and they are very active over there and they provide good information. So you guys can actually check it out. All right, the links to these website and proprietary trading firm, I will post them in the group after the webinar. So all the links will be posted in the group. And you have Fidel Crest and also City Trader Imperium, but you know, I don't really focus on these. I try to focus on the FTMO talent. That's what I did my research on, and I know a person who are actually trading a live FTMO account. So you know, within another few weeks or so, I'm gonna give it a try. All right, now Forex terms. Now these are the most common terms in the Forex market. And the first one is pips. All right, and pips is the smallest value change in the currency pair exchange rate. And in hindsight, a pip is the movement of price in the Forex market. There is no rocket scientist definition for you know, what is a pip. All right, and then we have the lot size, which I will break down after this. All right, so the lot size is a unit measuring a transaction amount. All right, now I will explain the different lot size, the unit, and stuff like that. Now, for the leverage, the 200 to 1 leverage simply means that, 200 to 1 leverage means that for every one you have in your account, you can place a trade worth up to $200. This is basically borrowing money from your broker. I see person borrow money from their broker to actually execute a trade. I don't believe in that. So apart from, the trading proprietary firms, try and use your own capital to trade the FX market. All right. The 200 to 1 ratio is typically the amount of leverage offered on a mini lot account. All right. And the typical minimum deposit on such account is $300. So this means that when you have a $300 account, it's possible you can risk up to $200, but as new trader, you don't need to risk no more than 1 to 2% of your account. Worst case come to part, you can risk 5%, but I don't advise it. All right, and as you go along, the typical minimum deposit on such account is 300, with which you can trade up to 60,000. But again, you would have to provide the broker with some deposit so that they can actually hold on to those if you blow their money. So I don't advise anyone to actually loan any money from the broker. Now, margin is essentially the amount of money that a trader needs to put forth in order to place a trade and maintain the position. Margin is not a transaction cost, but rather a security deposit that the broker owes while a Forex trade is open. All right, so this is your margin. So in order to open and maintain a trade position, this is the required balance. All right, now the broker not going to allow you to risk your entire account. So once you have this available, you can trade up to this. Once, take for example, if I open an 18 lot here with a 10 pip stop loss, and it pulls back to negative 10 pips about to hit my stop loss, then at that point, what the broker can do, they can actually close my position before it actually hit my stop, because I need this margin. I need to maintain this margin. So if it falls below that, the broker can actually close that trade. All right, and then at that point, all of these blue numbers will turn red. All right. Now, equity is your current running position, whether in profit or loss. I'm going to go back to the previous slides. As you can see here, the balance is 3,256, and the equity, because I have an open position here for a 1 lot and gold, the balance is 3,576. So if this goes in negative, then you just have to minus this from the current balance in order to get the equity. Just the same, we are in profit, so we are going to add this to the current balance in order to get our equity. All right, and current balance is what we actually have in the account. So this is what we have in the account. This is called our current balance, or balance, or capital, whichever one you want to call it. All right, free margin is the money in a trading account that is available for trading. To calculate the free margin, you must subtract the margin of your open position from your equity. All right, and then again, you have the free margin. So in order to calculate this, you have to subtract this from this in order to find the free margin. And then you also have the margin level. So if you notice here, my margin level is 195%. If this falls below 100, again, the broker can close the trade. So at all point in time, you want to maintain a healthy margin level, and this is in percentage. So the margin level indicator how healthy your trading account is. So as you go along, these are not hard to understand. So, as you go along and you start to play around with the MT4, the MT5, then you're going to understand a bit more about it. But, these are very simple terms. All right, now, the lot size. person might have problem with understanding the lot size. Now you have standard lot, mini lot, and you also have micro lot. The nano lot, we don't use it in the FX market. All right. So you can cross this out. All right. The unit that is required to trade a standard lot is 100,000. All right. And if you're going to open a one lot, which I did in the video that I showed you guys, are even in gold, this is like $10 per pips. All right. So if the market moves 2 pips in my direction, then I will be up $20. If it moves 5 pips, $50. 10 pips, $100. All right. Just the same. If it moves 100 pips, $1,000. You know, if it moves 1,000 pips, 10,000. It's just the same. For the mini lot unit, and this is currency, whether USD or JMD, whichever one you want to calculate it in, and you know the volume would be your lot. So, and this is a 10-cent lot, and a 10-cent lot is equal to $1 per pips. All right, and you also have the micro lot, the unit again 1,000 USD. Lot size that you're required to use is a 1 cent lot, and this is equivalent to 10 cents per pip. So 10 pips would equal to 1 USD. In this case, 10 pips would equal to 10 USD. For the one lot right here, 10 pips would equal to $100. If you move this to a 2 lot, 2 pips will equal to $40 because you know 1 pip will then equivalent to $20. If you move this to 100, no, if you move this to a 10, then 1 pip will equivalent to $100. All right. So as you start to use the MT4, the MT5, you're going to understand more about the different lot size and you know how to calculate risk and stuff like that. All right, so what I'm going to actually do now is to do a simple breakdown in the FX market. Let's go over to trading. And for the new person, what I'll advise you to do is to read the Candlestick Bible to understand the different types of candle and you know the candlestick pattern. It's very effective. So you can it's in the Forex group now. So you can actually go ahead and you know read that. Now, in analyzing the Forex market, I usually start from the daily time frame. See where we were. Now, on the daily time frame, what I usually do, I usually use the rectangle to identify my daily support. All right, and in this case, I have a support in this area. All right, you can also use the horizontal line just the same to identify it. If you want to use the rectangle or the line, sometimes I use both. All right, and we also have, you know, a resistance level all the way up here. Now, what I would do next is to move over to the H4 time frame to identify my key levels on the forward time frame. All right. Now, I think it was Thursday night we had this resistance right here on the H4. This resistance got broken on the H4, but this was during the Asian session. So that's the reason why I never took any buy on this trade, because I just, you know, I don't like the Asian session. And as I can see, we have our daily support here, and it is also intertwined with a 4-hour support here and here as well. And we have a H4 resistance. Now, when I am doing my analysis, I want to focus on the most recent support and resistance. All right, now to add text to your line, all you have to do is select, double click the line and select text, and you can go ahead, show text, can select the different color, white, H4 resistance. Same here again. So H4R on my chart stands for H4 resistance. Now, a resistance in the Forex market is when you have a candle closing green, which is a bullish candle, and then you have another candle closing red, which is a bearish candle. Then you have a resistance right here. Support, you have a red candle closing. You have a bear candle closing down, and you have a bull candle closing up. A support is formed right here. So this is a support, this is a support, this is a resistance right here, and this is on the H4 time frame. All right, then I move over to my 1 hour time frame to actually, zoom in on the different levels. All right. So take, for example, I came to the chart when this was, what time I come on the chart? Just gonna focus on the New York session because that's what I actually trade. So what you want to do, guys, also is to identify, this is 6 a.m. candle closing bearish. We have a 1 hour resistance here. All right, we also have another 1 hour support right here. All right, and we also have another level here, but I'm not gonna put another line because we came right here when this candle closed here. We came to the chart. All right, you go over to your 30-minute time frame. All right, you identify that. All right, on the 30-minute time frame, price is in a range right here. So what I usually do, I get my rectangle and I draw it like this. This is my 30-minute support. All right, my final analysis most time is done on the 30-minute time frame and the 15-minute time frame. All right, now take, for example, now price pulls back all the way down here, and then price start to push up and we get a break and close above this level. And this is our 30-minute resistance. The only problem with this trade is that we close pretty high above resistance. All right, now usually I try to take entries on the 15-minute time frame. All right, so you see, even with this 15-minute close, I can identify this area as a potential buy. All right, because price came up into the area one time, the potential exists that we can actually push again. And as I always say to you guys, you see 8 o'clock, and I want you to look at the time right here. This is the 8 a.m. candle. A lot of volume is in the market. So the 745 candle breaks and close above resistance. Clean break above resistance right here. This increased the probability for price to continue push towards the upside. So take, for example, if you are taking buys here, you would have like a 10 pip stop, and your overall target could possibly be this wick fill. And then with momentum, you have your H4 resistance up here that you could target overall, which would have been 42 pips. All right, and again, look to the left-hand side. We have candle movement up to here. We could push all the way back up to here. Even though this is a small range, but you have to understand when volume hits the market, price will break all support and resistance. So support is an area that actually push price up, and resistance is an area that actually push price down. Once price start to leave those areas, it increases the probability of the market continuing its push towards the upside. So that's what person need to understand in the Forex market. So when the market is in a range, just leave the market to continue to range and wait for that breakout. All right, just leave the market to range and wait for that breakout. I think I also identify buys above this level as well. This level right here. And you know, the idea is to always mirror clean candle movement. So when you have clean candle movement to the left, you know, your target would be the next resistance. If you are going up or if you are pushing down, then your target would be the next support. You know, but so most of the trade that's sent during this week, I think it probably about 2 trade that actually it stop loss there about. But for most part, the analysis that was sent in the group, all the trades played out well. You know, and in analyzing the chart, it is very simple. You just need to identify your range with support and resistance and wait for the market to break structure. For person who likes to do day trade, what you will have to do, you will have to focus on break and retest of structure. So take for example, you know, we identify this as a key support area. All right. And we identify a range here. So make this a bit cleaner. Now, in looking for a trade, this would be your no trade zone. This would be a no trade zone. So this entire area, you want to stay out of this area. You want to stay out of this area. So once you see price leave this area, it simply means that we are changing trend. So price breaks out, we push up, we create a new high, we pull back and farm support right here, not closing back below the range, buy. And you push all the way up. Your overall target, you know, could have been the top of this range for a day trader. We break again and close above this level. Clean candles to the left. Push up, we create a new high. Pull back, farm support, buy. Stop would have been, you know, below this area. So take, for example, you enter buy here. You know, you could have used a 14 pip stop or a 10 pip stop. And then overall, you would have caught this entire play. You know, and this entire move from Thursday afternoon to Friday is 157 pips. So if you were risking $1 per pip and you hold this from the Asian session, you would have made $157. $2 per pips, you would have made over $300. $3 per pips, you know, almost $500. So in analyzing the market, it is very simple and effective. Let's look at so what I usually use on Euro USD is break and retest of structure. I'm just gonna look back at incascent and analysis. Now for Euro USD, I think I sent this trade in the group. This trade was sent in the group last week. We are pushing up very hard. We came up to a key level right here. Just fix up this. We came up to this H4 resistance. All right. Now, once price, start to reject here, I was looking at potential sell for the market to push back towards the downside, because if you look into this area as well, we also have a daily resistance. And the higher the time frame, the stronger the confirmation and the harder it will actually be for price to break through this level. So this is one of the reasons why I was actually looking at potential sells. And as I can see, the market is in a downtrend. So when the market is in a downtrend, it creates a thing we call lower lows and lower highs. Now take, for example, right here. Just a moment. Eclipse. Now take, for example, this is a high created right here on the daily time frame. We create another high here. The reason why this is called a lower high, because this high right here is lower than the previous high, which would have been, this resistance. Lower lows is just the same. We have a low here, which is support. Even though this is minor, this support is lower than the previous support area. So this is a lower low. So this would be the swing high. This would be the swing low. Again, swing high, swing low. Swing high, swing low. Swing high, we still didn't break above here, so there were no buys at this point in time. Again, swing low. Sometime you will have the candles actually, close here and open in a different position, and this would have been because of the weekend. When you have the weekend, you're gonna find gaps between candles, but there is actually some support in this area between these two candles right here. There is support here, all right, because this closed bearish and this one closed bullish, so support is in this area. So as I can see, we are gradually making our way down to the downside, towards the downside. So that's the reason why I said, hey, based on the structure of the market and what I am looking at, I feel more comfortable in looking for a sell. And the setup looked something like this. My short position, think we identify price to retest the area. And I think overall, I think the stop loss, probably about 10 pips. I think it was a 10 pip stop. Yeah, I think it was above this candle. I think it was above this level right here. Yeah, I think it was above this level. And you would have caught this entire move down. This entire play is like 114 pips to this level. And as I can see, the market still continues to push all the way down to 224 pips. So if you had taken this trade and say, hey, I'm going to hold this trade, you would have made a good amount on this trade. So trading is very easy. Like for the Euro USD and the Euro GBP, I use the break and retest of trend line. So, and again, for the Euro GBP, I actually called sells on it from here. We came up to this level and price had difficulty breaking this structure. We came up here, we retest level, we rejected this resistance, we push back down. We came up again, rejected, push back down, and I sent the sell. I think it was right here. The entry was right here. And stop would have been probably about 14, 15 pip. And you would have gained overall 100 pip if you had hold this trade. So day trade, it takes time, and it comes with drawdown sometime. But once you do your analysis correctly and you can identify the direction the market will push in, you can actually hold the trade for the entire day and make good profit. All right. So what I'm going to do now, I'm gonna be using the simulation software to actually show you guys how I trade the Forex market with risk management and also entry in high volume time. Da-da-da-da. Forex simulator. Da-da-da. Yes. Yes. Where you gone? All right, just a moment, guys. Why this not coming up? Why not come up? Okay. We're connected to. All right, good. All right, so I'm going to start a new simulation. So the currency I will be looking at is the GBP JPY. The time frame, I'm going to keep it relevant. So I will be looking at, probably about 2020 April. Let's do about July. July, we can start Sunday, the trading week starts Sunday. The account balance, let's do a 50K account. Okay. The time, New York close. Leverage, let's do a 200 to 1 or 1 to 200 level real time. 2020 July. Yeah, thereabout. Days on chart. 250 days. GBP, JPY. All right, so everything looks good so far. All right, so what I'm doing now, I'm just gonna add the different time frames. So the 5 minute, the 15 minute. Now we have the 30 minute, just the same. The 1 hour. So the H4. And you also have the daily. So I think these are pretty good. So what I'm gonna do now, I'm gonna open the different time frame for the simulation. All right. Now this is my buy button. This is my sell button. I can risk lot size, percentage of the account, or a fixed amount of cash. So in this case, for each trade, we are going to risk like $500, which would be like 1% of the account. I think for a stop loss, we can focus on a 12 pips stop, and our overall take profit can be about 30 pips. All right. Now sessions. This is 5 p.m. EST, Eastern Standard Time. Usually I come to the chart at 13, which is like 6. All right. I'm just gonna keep this here. We also have the news tab. So this is where I can actually monitor the news. So Gov Daily Speak, High Impact News, red folder, green folder, low impact news, orange folder, medium. All right, I can actually also use, just a moment. Templates. All right, so I'm just loading the settings that I actually use to, do my thing, fix scale. Properties. Yeah, so I think we are pretty good now. All right. Now, looking at the overall market trend, we are bearish. And what I mean by bearish, the market is in a downtrend and we are pushing towards the downside. Now, looking at the daily time frame right now, as you can see, we have a gap here. So this probably would have been the Friday candle thereabout, and then you have this new daily candle actually gap up. So in this entire area, we have some form of support here. Yeah, and our most recent daily resistance is right here. All right, and this overall, 74 pips. So what I usually do now is to go down to the H4 time frame. So when I move down to the 4-hour time frame, guys, again, I am going to identify my key support. This is my most recent support on the H4. This is my most recent resistance. Again, support push price up, resistance push price down. Price close above support, it increased the probability for price to continue up to the next significant level, which will be this area. If price breaks here, we can look at target down to here. All right, so what I'm gonna do now, I'm just gonna clone these support and resistance over to the 1 hour and the 30-minute time frame. And as I go along, I'm just gonna modify my zone and identify the best possible area to actually look for trades. All right, now looking at this. We have a support here. All right, we have a nice little support here. I'm just gonna make these a little thinner so that you can look a bit better. And now we have resistance here. Now, what I am going to do next is to move down to the session I usually trade in. All right, so again, the market just opens. Now what I'm gonna do as well, I think I'm gonna identify ask, where is the ask? Show ask price. Now guys, this is the current market price. All right, this is the bid price where the market is at. If as the market opens, you jump in the market, this is a drawdown you will actually get. A 48 pips drawdown. All right, this is what the broker will actually make. 48 pips. So you have to wait until, you know, the session that you trade in and leave the Forex market, you know, when it is coming to an end, because the spread will increase. The spread is the difference between the ask price and the bid price, these two lines right here. So this is the ask price, this is the bid price that the market is currently at. So take, for example, you want to open a trade now, and I'm going to show you guys. I'm just going to take a buy. Let's set, see, stop loss is invalid or was current market price. Let's use a 60 pip stop. I'm just going to show you guys an example why it is important to actually stay away from the market at this time. So take, for example, the market price right now is here. This is the current market price. And I take a buy. This is where the market execute my trade. All right, this is where the market actually, this is where the market actually execute my trade. So you see how much you would actually pay to execute this trade if you choose to trade when there is no volume in the market and the market is just opening from the weekend close. Your stop loss is here and the market execute a trade here. So if this line pulls back and hit your stop, you are actually out of the trade right there and done. And our account, look at this. Our account started at 50,000. Look at this now. Why it opened such a big lot? Just a moment. Well, it opened a 100 lot basically, but this would have been the drawdown. So 100 lot I think is like $1,000 per pip. So $100 is $1,000 per pip, and we are in like let's check. We are in a 48 pip drawdown. So right there and then we are down $48,000. All right. So I'm just doing this to actually show you guys that you see when the market opens, just leave the market and give it time to breathe so that, you know, the market can form some structure and the spread can come down. So as we go in the different sessions, I'm going to just skip along on the different time frame. You're going to find out that, you know, the ask price going to come closer to the bid price. So currently, you know, this is the ask price and this is the bid price. So as I can see, the market pulls back. But in order for us to go in profit just the same, we will have to break above this level in order for this trade to go in profit. So the broker executed a trade here because, you know, the market just opened, spread was high. All right, and then as we start to move our way into the Asian session, you're gonna see that the ask price start to come closer to the bid price. I'm just gonna skip along. So I'm gonna move up to the NY session, which is 13. So as I can see, we're still in drawdown 50,000. We're at a negative 28,000, just the same. All right, so let's see if price will actually push up to that level. And as I can see, we'll go back in profit. All right, so I'm just gonna close this position now and actually wait for some structure to form in the FX market. So New York session 13. All right. So this is like 5:30 a.m. in the morning. What I'm looking at now, we have a support here. We have a 34 pip down to this next support area. So I'm just gonna highlight this support area. So what I need now is for a candle to actually Gonna delete these and clone. Gonna bring these over to the 15 minutes. So clone 15. So I'm just gonna bring over my levels, my support and my resistance to the 15 minute. So what I'm looking at now is for a candle to actually breaks and close below this level. That's what I'm actually, looking at now. So let's start the simulation and see, because you have to understand we are in pre-NY now. This is the New York opening. So if we can get confirmation for a sell, then my target overall will be here. And if the trade start to go bad, then I'll just manage risk just the same. All right. So what I'm actually doing now, I'm just gonna speed up the candle so that it can move a bit faster. So I just select a random time frame. I look for what I want to see in the market, and if I get confirmation, then I will go ahead and execute on that trade. And Forex is a test of discipline and patience. It's not every single day you're going to get a setup in the Forex market. So as I can see, price is rejecting the here because we have support, but I'm not going to take a buy because price is still in this range. I can see we are coming to a close. All right, so what I'm gonna do now, we're still in this range. Better buys, we need price to actually breaks and close above this level. We need something to close above here. Sell, still the same. We need something to leave consolidation right here so that we can actually, get good trade in a better range. I'm just gonna change this color. Let's do, yeah. So I need price to leave this area. So what I'm actually looking for is a break and close above, and we can actually risk a small percentage, 24 pip, 18, thereabout. You can actually risk a small percentage for buy if we leave here or sell if we leave here. So if I don't get that confirmation, then I won't be executing on a trade. You can see price came down and tapped the area, we got rejected. So we still need a candle to actually break and close above or below one of these areas to actually look for a trade. You know what I'm actually looking at too, guys? This would be very risky. I'm just because you see, you have to understand, you see, as the market move along, you have to make changes to your zone. So usually every day what I do, clear the charts and mark up new zone, and seeing that we came into this area on the 30-minute and we form resistance here and we have support down here and we also have clean candles right here. 1, 2 to push all the way back up here, which is like a 30 pip move thereabout. So let's risk it for the biscuit. Let's see what happens. Price is still ranging. You can see we are pushing down. This is the NY open. All right, when you get this, we have some form of volume, and if we don't get it at this point, You can look for it at the New York Stock Exchange, which would be like 9:30. And you also have the London close, but I definitely need a candle to break and close above. So I'm gonna monitor this on the 15-minute time frame as well. I know sometimes we can get decent entry on the 15-minute. Wow, that's a rocket ship. All right, let's look at the 30-minute. Now, looking at this right now, all right, we start to break above all the candles I hear. We are in high volume session. This increase the probability of price continuing its push towards the upside. But at the same time, if I should take a buy here, if I should take a buy here now, I will have to manage risk. All right, so what I'm gonna do now, I'm just gonna risk let's risk percentage our money. Let's risk $500 on this trade. Let's risk $500 on this trade. Stop loss. Let's do about a measure. So probably I'm gonna get executed here, like a 17 pip stop. All right, let's do about let's do a 15 pip stop loss. Our overall take profit is 30 pip, but I will be managing risk. And I will also be securing position at 10 pips, you know, probably close 50, 60 or 70% of the position and just leave the rest to run. So I'm gonna enter buy position. Can close this, can trade, modify. Now guys, in managing risk, take for example, we did not create a lower wick. You know, sometimes we get that big volume push without the wick, but my confirmation is that price came into this area multiple times. This candle breaks and close above this resistance on the 30-minute time frame, and this candle start to clear the wick here. That will be my confirmation for a buy because we are in high volume time. Price has been ranging. We break and close above resistance. This increases the probability for price to continue back up to this level. But take, for example, if this price pulls back to break its own low here, I'm going to close 50% of the position and just leave the next 50 to run. All right. So if price starts to pull back, you know, you just have to manage risk. And good confirmation now is that the 30-minute candle actually close clear above our resistance level. So this also give an extra confirmation for price to continue its push. But I'm still gonna manage trade on the 15-minute time frame because if this candle starts to break the low, which means it's no longer showing respect for the low, then you know the probability exists that we might get stopped out. So we have to close 50% of the position in managing risk and leave the next 50 to run. And as we approach 10 pip, I'm gonna secure position now. This is a simple and effective trading strategy in the Forex market. All right. Price action, this is called price action. This is what I use to trade the Forex market. All right, so at this point we are risking $500 on this trade. So I'm gonna move my stop loss to entry. So my stop was here and I move it to my entry. I'm gonna close 80% of my position because when you're securing profit, you want to close most of your position. All right, and I'm just gonna leave the rest to run. So even if this price should pull back to my entry and stop me out, I would have secured some position in this trade. All right. So that's the good thing about it. So if price continues to push, praise be to God. If we get stopped out, it is what it is. We'll come back the next day and repeat the same process. You know what I'm gonna actually do? I'm going to modify this trade. I'm going to modify this trade. All right, seeing that to secure some position, our trade is now risk free. Let's move over to the 30-minute time. I'm just gonna modify this trade and just leave the entire position to run to see if we will actually push all the way up in the market or if we are going to reject this resistance. And again, we'll have another level here. Price breaks and close above here, the probability exists that we might mirror this move up. But you know, I'm just gonna allow the simulation to do its thing, and we'll see what takes place. And if you even look right now, we are still in the high volume session leading up to the London close, which is the end of this green bar right here. So person need to understand, you see, price action, nothing beats price action. I don't need to use any indicator to trade the Forex market. The most important thing for me is to remain disciplined and control my risk. And don't get emotional about a losing trade and try to revenge trade the market. You know, say if this candle actually close back in the range, I'm gonna exit the trade if it close back in the range. Yes, I'm going to exit the trade because as you can see, we came up to this level, we break and close above. So this is called a fake out. So when you have price break and close above resistance, and then you have the next candle close back below resistance, this is considered to be a fake out. All right, and take for example, if I had entered, say we break and close above this level with this candle, and I took a buy here. You see, once this candle start to break the low right here, I would have closed 50%, and it's possible my stop would have been here, and I would have gotten stopped out. So at this point, I'm just going to close the entire position and move on to the next trading day. To see if, as I can see, price came all the way down. Just like that, close back in the range, push all the way down, would have got stopped out at break even. So again, move on to the same trading session 13, which is like 13 is 6. And what I'm gonna do again, I'm going to identify my range. All right, now looking at this structure. I am not looking for any sells at this moment. We have a support here. We also have resistance. You know, let's check this range. This is at 21 pip range. So it's possible if price breaks and close above here, we might be able to get a few pips. All right, we might be able to get a few pips back up to here. So I'm just gonna bring up the session to see. So we're at 6 a.m. EST. So let's continue with the simulation. Because you have to understand, you see, once you have a specific time where you come to the charts, you know, you just identify your different levels and, you know, you trade accordingly once you get the right confirmation. But if I don't think I'll be looking for any sells if price actually close below this area, because the range to the left is pretty messy. All right. And the good thing is that we create support here and we create another support which is higher than the previous. So this is a higher low. All right. This is the low. This is the high. This is the low. Are we going to make a new high with a break and close above this level? Let's wait and see. And as it relates to question, guys, you can write down your questions and I'll try and answer as much as possible after I finish the simulation. So what I'm doing now, I'm just gonna do 5 days. This is the second day. So let's see, 15 minutes. All right, what I'm gonna do, I'm gonna clone these over to the 15 minutes. So as you can see, we break and close above on the 15-minute time frame. All right. So what I'm gonna do, this is risky. I love to get a 30-minute candle to close above the level to actually take buys or sells. So I'm gonna risk $250 on this trade, and I modify the amount of money I risk per trade based on the type of setup. So if I don't get strong confirmation, I am not going to risk a lot, you know, or the full 1% or 2%. So take, for example, you know, we take a buy or a stop is below the previous 15. Now in managing risk, if price starts to break the low here, I'm going to close 50% of the position just the same. That's how you actually manage risk in the FX market. I know TP1 can be about here, you know, 486, 586, 619. Good target. So let's see if we will continue to push up. But if it starts to break the low, I'm going to close 50% of the position. All right, so as I can see, the 30-minute candle is now above this level. And the good thing is that we actually pull down to create a lower wick. So I think as we break the high here, this increases the probability for price to push up to this level. And then, you know, we can secure some profit at 10 pips. It should be about 240, 250 there about. But still gonna monitor this bad boy on the 15s, because if this break the low, knock off 50% of the position. We're up 76. We'll have to manage risk just to see. So as I can see, we have an indecisive candle. All right. And an indecisive candle, which is also known as a doji candle, the same place it opens, it closes. All right, so let's see how much pips we went up. About 8 pips. You know, so in managing risk right here, I think I'm gonna just close 50% of the position. Because you know why? There is indecision in the previous candle, and I don't want price to actually hit my stop at my max risk. So I'm just gonna control. But in doing this, I know the probability exists that we still can continue to push with volume. All right, but I just have to manage risk. And if we get TP, then you know we would have made but the small position we actually close. As you can see, we got a nice bullish close there. Just gonna leave the trade to see if we can actually take profit one, or if we are going to get stopped out. And as I can see, price actually closed back below the range. And so let's see if this 30-minute candle close below the range, and I might just exit the entire position. Wow. GJ doing a somersault. All right, and as you can see, we push up to this level. So I think at this point, it is necessary for me to at least move, you know, stop to entry. This is like 11 pips, good enough. But what I'm gonna do, I'm just gonna move my stop loss to entry, and I'm just gonna leave the entire position to run to see if we can actually break out of this area and continue to push towards the upside. So break even. See if we're gonna push. And even if we get stopped out, we only will be losing a small amount. So in this case, I wouldn't even worry about that, because look at this. And this is risk management 2.0. So overall, I was risking $250 for this trade. I could have secured about $80, and in exiting this trade, I only lost $14.99, $15 basically. That's how you manage risk in the FX market. So when you have candle closing against you, it increases the probability for you to get stopped outs on the 15-minute time frame, the 30-minute time frame. You want to close some of your position to manage risk. All right. Oh, this is a second day. What I'm gonna do now, I'm gonna look to see if we can actually identify any other setup in the market. And I'm just convinced the price might bounce from the level here and just continue to push up. But just let's see. Well, pull back in the range. So that been about the 0.5 zone for person who use the Fibonacci. This would have probably been about the 0.5 zone or 0.6. I see the good thing. Move stop to entry and look at this pullback on the candle. You know, so risk management, very important, guys. You can see news, high impact news coming up. Ooh. Yeah, so what I'm gonna do at this point, I'm just gonna move on to the next session because the market is just dancing around. So again, sessions. So let's go back. So this is, let's go back to 6. All right. Now, again, let's look at the news. So what we have in the market. You know, we have some low impact news. CAD. Yes, I think we are in the safe zone. So looking at the market structure now. The thing is, we have support here. From here to here, this is 30 pips. So I think for better sells, we need candles below this level. All right, this is very messy. So I'm just gonna identify here as a no trade zone. For buys, currently what I'm looking at, I need candle to break and close above this level. And this is what I do every single day on gold and GBP, JPY. You know, I don't need any indicator. So let's see if we can get price to break and close above this level to actually look for a buy, or if we close below here, we can actually look for a sell. And guys, whenever you're in the FX market and you see prices, you know, pushing up to resistance like this, don't jump in a buy, don't jump in a sell. Wait for a clean break and close above the body of the candles. You know, sometimes depends on the wick. If it is like if the wick is like a pip or two, you can wait for price to create a lower. We can break the high and then you actually go with the buy. But you know, I need a close above. And in waiting for the close above, I also understand that you know the market might just make one big push and I miss the entire play. But you know that is okay. Still think we need something to close above. See if we can get the 30-minute. If not, then you know, can't execute on that. So as you can see, price is just rejecting the area. So we need a break and close to actually look for a buy. 30-minute, like 23 pip. You know, the thing with the 30-minute is that, you know, the higher the time frame, the stronger the confirmation. So let's see if we will break out. Monitor, we need a 15 close. This is the 30-minute. I think looking at this now, what I'm looking at, we need a lower wick. And I think for safer buys would be as we break the high here. So we need a lower wick, and if this current candle start to break the high, then I'm gonna enter a buy position if we start to break up. Because seeing that we close above this level I identify, you know, and we are approaching high volume session, you know, so the probability exists that we might actually continue to push towards the upside. And we are actually leading up to the New York Open at 15 right here. I think if we tap the area again, I'm gonna, yeah, so what I'm gonna do now, I'm gonna risk about 500 on this trade. But risk management, 15-minute time frame. If the current candle pulls back to break its low, I'm gonna close 50% of the position. I'm gonna enter a buy. So let's see if we'll continue to push. The good thing is that this 15-minute candle close clean above the level. So if this candle start to break the low, I'm going to close 50% because I need price to stay above this level in order to continue the push towards the upside. And if you look here at the 15-minute candle, this 15-minute candle respect the low. So if this candle can't respect the low of the previous, it increases the probability to get stopped out. So at that point, risk management will come into play. So if we start to actually break the low, I'm gonna close 50% of the position. And as I can see, price came very close. So let's see how it goes. So if it actually breaks it, then I'm gonna close 50%. As you can see now, looking at this, you know, indecisive candle. Do you want to close 50%? Seeing that we are risking $500 and we have a doji candle closing just at resistance. So this is still not a clear break. You know, so what I'm gonna do now, probably gonna close 50% of the position in managing risk. Good risk management will allow you to survive in the Forex market. So close partial, let's close 50% of the position. The good thing is that we are managing risk. All right, now we just basically, we are risking $500 on this trade, which is, you know, 1% of our overall account. We are up 2.06%. No, if price should hit my stop, I won't be losing $500. All right, so let's just leave the trade and see how it plays out. If we continue to push up, or if we're gonna get stopped out. Very important. Nothing is wrong with losing a few dollars once you manage risk correctly. But if price push up on it or a TP, then we would have made back what to close out plus some extra. If we hit stop loss, then you know we manage risk well. And I think at this point here, we'll get stopped out. So I'm just gonna go back to look at the trade history and show you guys the importance of risk management in Forex trading. So overall, we were risking $500 and we lost $308. All right, that is risk management in Forex trading. You have an indecisive candle, and if I look on the 15-minute time frame, you know, we had this candle close against us, close 50% of the position. This candle starts to break the low of the previous. This increased the probability of us getting stopped out. So, you know, I have to manage risk. So right here, I actually saved myself $192 on this trade. For me, this is a winning trade in the basket. You know, so I'm not really worried about this minor stop out, because I know that when I get trade to run and hit my full TP, then it's gonna be a merry day. So we got one hit for the day. We're still in high volume time. The market is messy, so still have to make some form of adjustments. I'm just gonna use the 30-minute. Yeah, we need a clean break above. Yeah, we need a clean break above here. So if I don't get that, then you know I'm just gonna come back the next day and look for the same setup. So on the 15-minute time frame, price basically do a little fake out, close above resistance and then close back in the range. You know, so at this point, I think I would definitely need a 30-minute candle to close above the level to actually look for a trade. I can so far minor resistance. So we need sell below this level. So what I'm gonna do, I'm gonna move on to the next candles to see what the market is doing. Can see we're just ranging, range. You know, it's a good thing we actually manage risk on that trade. If not, would have lost $500. All right, so I think at this point the trading day is basically over. So we are going to move on to the next session. So we have 2 more days leave. So again, come to the chart at 13. So I'm just going to identify my areas. Of a resistance here. You know, this move is like 21 pips. I'm just gonna leave this green line here. All right, but if price can break that level, our overall target will be here. All right, also I'm looking at this level right here. This is 21 pips wick fill. If price breaks and close above here, let's look at the 30-minute time frame. Price close above here. Let's look at this range now. So the market is looking choppy right now, basically. You know, I don't really like the market structure right now. Yeah. So I think better buys will be above this level. It might be possible above here, but it will be risky. You know, and let's look at what we have for sells. And I mean, sell is just looking so messy right now. I think for sells, if we can actually break and close below this level, because as I can see here, weak rejection. You know, this area is just messy. So I think the cleanest move would be right here, probably to about down here, and this is 41 pips. I think for sell we need to break and close below that level. I'm gonna see. All right. Ooh. Should have skip it on the 1 hour, you know. Skip it on the 1 hour. But the idea is that, you know, it would have been risky, but to get a nice 30-minute candle close above here. And this is always the idea. So even if I go back to the previous candle, all right, just to show you guys the importance of waiting for candle to close above the level. This is like a 20 pip range, you know, risky to the wick, feel risky, but we get price to break and close above. So all you have to do, wait on a lower wick, or if price starts to break the high, you go with it. And overall, we break the high. So if you take a buy at this point, you know, in managing risk again, your partial stop loss would be below the current candle. So if this candle start to breaks its low for a second time, you're going to close 50% of the position in managing risk. And you know, you probably would have went up into some decent profit, but I was on the 1 hour time frame. You know, and up 345. Yeah, what is it? So we actually missed a play there, basically. But you know, I saw something like that. Let's just move stop to entry to be safe and to see if we will continue to push. Or if we're gonna get stopped out. Now I can say the market just a push. So you know, we could look at that. So yesterday we actually went up to $800. You know, so this would have been the idea overall, but you know, we actually missed the player. As you can see, price came up and tapped this level and start to reject. But this would have been the buy I would have taken basically. And it's always the same idea for me. So I'm just gonna do one more day and then we do a question and answering section. So let's move on to the next trading day. And as I can see, price still continue to skyrocket. Look at this. Identify this level again. You know, it partially closed above right here. You know, it could have taken an entry here just the same. Because as I can see, this green line runs above the body of the candle. And the body of the candle is where actually, you know, mark my resistance line. So I use this red zone to toggle the body of the candle to a certain point of the wick, and if price can close above the body of the candle, you know, or if better if it close above here, then safer buys. So just gonna look at one more session. You know what? Let's look at this setup right here. Let's look at this setup. This is the Asian session. This is like 5, 6, 7, 8. So let's see if price starts to, probably break and close above here or start to break these wicks. Just risk a small percentage to see what the Asian session has to offer. Let's see. Whoa, that was fast. But the idea, the idea would be to actually enter buys if price starts to break this level. Yeah, that was fast, but let me just make it go on. Yeah, so would have been able to, see, it just simply, guy, would have been able to secure 11 pips just like that. So I actually have different ways in which I enter the market to look for trades. I have different ways. All right. Sometime I wait for a candle to close above, and if we form resistance and high volume and I see price start to break clean above here, then I can actually take a buy. But let's move on to the NY session. It was pretty fast. So I would have been able to secure about 10 pips. Yeah. All right. This is the leading up to the London opening. Clean range. All right. So looking at this now. You see, whenever you don't wait for candle to close below the area, it is a bit risky. That's one of the things with these kind of play. And, this would have been an impulse play. A more structured play would be to wait for price to break and close above or below. But by just looking at this right now, I'm just going to ignore this minor support because, clean candle. And for buys, we need price to break and close above this level. So let's see if we start to break here. We might continue to push down. You want to risk 250. 215 a sell. In managing risk, it's always the same. If price start to break it high for a second time, that increase the probability of price closing back in the range, and I might just exit the trade. But we are leading up to pre-London. We have local volume and stuff like that. Let's see how this trade will actually play out. As I can see on the 30-minute candle breaks and close below this level. We're still not in the clear as yet. We'll actually need a break of this wick for better confirmation for price to push towards the downside. All right, so let's see how much people actually went up. 6 pip. So we went up 6 pip. So at this point, we went up 6 pip. Price pull back to my entry. I just have to manage risk. So again, I'm gonna close 50% and leave the next 50 to run. Let's see. But if price close back in the range, then I might just exit the entire position. But let's see. Can they move far? Let's see if we'll actually push all the way back down to this level. Because the structure is looking good and we actually break and close below the level. So let's see. Until I said this trading strategy is it just blows my mind, guys, to be honest. All right, so I think at this point we can actually exit the position. Push up about 16 pip. And we are now at 11 pip. Let's close 50% and just leave the rest to run to see if we can actually hit our target. Close par. So in managing risk, we close negative $17, risking $250. We are back in profit with 105. We are going to secure 50% of that, which will be roughly about $102 to $103, and move our stop loss to entry and just leave the rest to run to see if we will actually hit our overall take profit. And the good thing about securing position, after you secure position, you want to move your stop loss to your entry so that the trade will be risk-free. As you can see, we came down and, rejecting the area. So I think at this point, so what I have experienced sometime in the Forex market is that price will come so close to your take profit that you don't secure position and the market, turns against you. So I'm just going to close. Oh, damn. Sell. Close all. So I'm just going to close the entire position right there. All right, so this is the last session. This is a 50K account. We are up 3% in a week, $1,603. All right, and we took losing trade. These are the results. All right, and we manage risk just the same. So as a Forex trader, you're not going to win every single trade, but the most important thing is to try and focus on your discipline, consistency, risk management, 1 to 2 trades per day. And if you feel the need to take a third trade, just ensure that your first 2 trades are winning trades, and you are only going to risk a small percent of one of those position that you would have won. All right, so just a moment.